All right. Good morning, guys. Oh, how was your night? I think morning video like this is the one that's look more sweet to me now. But I'm not gonna be able to be doing it a morning like this. Or some most of the time I will try to be doing it in the morning because I think looking at the basis of things, I'm getting better at it, and I think early morning some stuff like this it's much more comparable than the afternoon, like the night, the one we do. I did every like 10 p.m. to 11 p.m. Nigerian time, and since we don't use Nigerian local time to trade much, and because me I make use of the New York local time, so um I've been doing this video like this week now in the morning, and I've seen a lot of things that I really been missing out to tell you guys on. If I did the video in the evening, there will be more information that I couldn't be able to speak out that we have effects on the overall price delivery for today. So I that's just it. I just wanted to add that context. And if this is your first time stumbling on this YouTube channel, please subscribe to this channel. Many of you are watching my videos and not subscribing. That's not encouraging at all. But I'm not desperate for it, all right, because the algorithm will still get me to where I want to be. So that's it for today, and I will go into what I have for to what I'm looking out for in for today prices. And likely before then, I would like to say this video is much more dedicated to to teach you guys how to determine the daily bias, right? Yeah, what I'm more interested in is how to teach guys how to determine daily bias. So whenever you learn it, you can go and do your stuff, things yourself. You don't really need to be watching my daily videos. I am not training you to be stagnant here, so you come and watch it every day. But what I'm telling you is that I want you to put your focus on the chart and you know journal as well. All right, just like I am doing, you journal too and all that. So we don't really have much today. I think I'll make use of maybe 10 to or 15 minutes for this video. So stick around and let's see what we have to learn about today. Now, the Euro US dollar daily contract for Wednesday, 27th March 2024, delivered as an the daily contract deliver as call out from yesterday price projection, pricing lower and what closing below the opening price. And also we did price higher and tap on the lower time frame what areas of interest, which is that's very precise. And I think that is it. And if you did watch my previous day videos, I think that will enhance you more on giving you the clue on how we determine this daily bias. uh, I'm very pleased to see Euro delivered and forming a swing high with Tuesday candle and sweeping the previous day low. Now, what I mean is that yesterday price delivery, which is Wednesday, which is this particular candle, this one that is forming today now is not the one we are referring to. I'm referring to this one. Leads to the formation of what is swing high because it is the price that now confirm that this price delivery is a swing high. This particular candle is a swing high, so leading to that swing high formation and price stay below it. So on the daily contract, we did not have a much large range day for Wednesday, and we anticipating a large range day for Thursday, which is today. More likely today than Friday. So we are looking for a big range day for today or Friday, but more likely today. So uh let's go to the okay, taking us into today price, which is DXY. This is the daily contract for DXY daily contract. Now, thank God we have the XY, and even though we don't trade the XY, we are using the XY to compare with what euro. Now, thank God we have the XY because the XY give us what the blueprint uh, for euro. Now, if you look at the SY, there is a volume imbalance, and there are many things that we can see, or many PDRAs, or there are PDRAs inside this daily contract of the DXY that is not on what euro, and all those things is a sign for us to stick to our buyers. Like this volume imbalance, this price higher is a sign that we are likely to come above here, just like we created this kind of move and that price delivered. So as this is to, we have seen a jump in price, and we are anticipating for today to take out what this day high, which is very, very, very close. Then consequently, we want to see this, which is maybe probably next week we are going to see this taking. And if you see Wednesday price looks indecisively, this line, this two line is just to indicate. If you go on the lower time frame, we are going to be able to see it more clearly, just to indicate the volume imbalance that was formed today. I hope this is kind of very, very uh I'm not going to say interesting, but I think this is very this information I'm giving is very is making, you are making good use of it, because yeah, that's the best thing I could say about it, because this is sometimes kind of like, wow, this is precise, or sometimes it's precise and sometimes it does not. So that is just the whole thing about this trading, though we cannot be totally 100%. So that's it for the daily contract for the XY. And let's go to the 4 hourly contract. I'm not going to go just jump because I have things to show. All right. So if you look at the SY closely, you're going to see that the contract, the 4 hourly contract for the the 4 hourly contract for the XY has shown a significant jump here, which is we close here and we jump into here and open here, price lower, fill in the what inefficiencies, which is the volume, the daily opening gap. All right, DOG, daily opening gap. Now we fill in, or even we did not fill it totally, fill in it. And also what happened here, we price into this volume in this inversion fair value gap. There is a fair value gap here between this price and this price, now becoming an inversion fair value gap, and we price into it, the bottom of this candle respecting that volume imbalance, and now we are going higher. All right, so this is a very, very interesting price action. So we are anticipating for us to go higher, retest on this blue line before, even if we have to come here or above here, before we get to see price take out this short time buy side liquidity. So even if you see from what we call out yesterday, so looking from what we call out yesterday, we're looking for these areas of interest to be tapped. And if you look at price really deliver. Now, like I was thinking that we might not get into this play, but I was so happy that it gives us that opportunity. Look how sweet we delivered impulsively into it. And now look at the candle is respecting what the consequent encroachment of the candle wicks that deliver into that area. We come back into the midpoint, now we're going higher. So everything is just algorithmically what delivering how it is anticipated to be. So also, if you look at now look at the euro. Now those PDRAs, or those areas of interest that we are looking out for on the DXY, they are not on euro. If you look vividly, they are not. But they also the euro price is actually delivering uh effectively, as we call out. Now, if you look how these areas of interest was treated yesterday, we deliver inside it and we price below. And this is what I refer to call out for you guys yesterday as well, the ICT unicorn model, right? I think I made mention of that yesterday. This is a perfect illustration of the ICT unicorn model on the what 4 hourly time frame. It is very hard to see this on the 4 hour, but you can see it intraday. You can see it on 15 minutes, 5 minutes, on 1 minute intraday, many times on the daily time frame. So on the like many times within a day. But this is very let me say very rare to happen on on a higher time frame like this. But is this kind of price pattern also happen on a daily time frame? But this is very kind of rare. So that is it. And the Euro US dollar 4 hourly contract showed nicely how price deliver efficiently into day trading. Now on the 4 hour, we can see that price rally higher, tapping on the 4 hour fair value gap or CB and delivered lower, but price movement was not fast and did not take out previous day low sell side liquidity before the closing hours. That is so we close at this we at early price we deliver just like I've explained earlier, but we did not close below this price. So that was what I'm actually referring to. And casting forward, we have no current what hourly PDRA to support today price action, but we still projecting for lower price delivery, working with the primary market structure. Now that is what I've explained, that on the 4 hourly contract, we really don't have a PDRA currently on this particular time frame that we are wanting the market to react off of from. But with the primary structure of this market, we knew that the price is going to come for this sell side and this sell side liquidity. So we are working with the primary structure and we are going to go on a lower time frame to find and refine this kind of model. If we see this kind of thing happen on the lower time frame, that would be very interesting to make use of. So let's go to the hourly contract. Now, if you have eyes enough, you can see what I'm referring to on the hourly. This is a unicorn model and it just happened here. We have a swing low creating sweeping above a high and now having an impulsive low price delivery. Now this impulse leg down will now lead toward a reversal into this area. And also we have seen that this is a fair value gap that will just begin to turn into an inversion fair value gap. All right, that's a fair value gap that was used, and now we want to see the next hour price higher into this fair value gap and what deliver lower. So basically, you can you I don't know. I'm not telling you to go and engage, but you can see this happening real time. Now, this is what I just show you on the 4 hour happening on an hourly time frame. But now you can't expect the symmetry to be always the same, meaning that the primary structure that you see on that 4 hour time frame then cannot be the same with this primary structure of this one. The way the 4 hour will deliver so fast, you cannot expect same kind of price delivery on this one. So that is where the complication comes in. All right, that is where you we the confusion and the complication comes in. But if you are intelligent enough and you are more focused enough, you there is a high chance for you to know uh how to make use of that information. And also, if you are going to make use of this particular PDRA, if you target here, you should not be stupid enough to be targeting higher time frame or external range liquidity, because this is an internal range or liquidity. We It's an internal range liquidity, but we're not going to be looking for on myopic what areas of interest to take profit. You have a low here, and if the market is going to give you that, you have another low here, and that's over 20 pips or 30 pips. If you get that in a week, you should be done. 20 pips in a week is money. just because of the liquidity that we have here in Nigeria is not much. All right. So let me just go into what we have and I will call it a day. Now, the Euro US dollar hourly contract for Wednesday, 27 March 2024 contract shows how nicely price is delivered efficiently. Now, the daily profile is an obvious 5 o'clock a.m. New York local time as the high of the day that price inside the 4-hour fair value gap or CB and also form efficient price delivery for the daily time frame. This is what I'm saying. We price into these areas, then we move, and also on the daily time frame, this candle low and this candle high is an efficient what price delivery that has just been formed or formed on that particular time frame. So you have that to be very conscious of. Now, the low of the day is formed at 8 o'clock p.m. New York local time that sweep a short time sell side liquidity and price back into the daily range. Now, the daily draw on liquidity still remain the same, which is the sell side what liquidity or sell side delivery. So have that at the back of your mind. And where we are targeting is this low. This is relative low. If you're going to make use of this today, PDRA. If you see, this is an inversion fair value gap that has been used here, and we created, just look at the market structure. We created a swing high and now we have sweep it. Now sweeping that high has now given us opportunity to trust this PDRA that is forming, but we need to wait until it forms completely. That is, we need to wait for this candle to close, because this 1 minute can still do some shit, but we need to see it close clearly. So that is very, very important. So let's go to the XY, and I think I will just explain that as well, and we'll end this particular video because it has shown incoming mail. So that's my that's my MT5. So that's not a big deal. So if you look at the XY, we have this fair inversion of fair value gap, just like we have seen on Euro. Now we treated it, and also we fill in the volume, the void that was formed in today price, and now price react off of it and we delivered. Now we want to see what price close above here. All right. Now it is more clearly on euro, as euro price moves so impulsive, but we need to see. Okay, it's almost time to close, but which is almost 32 seconds now. A new hour we are open. So yeah, a new hour has opened, and that's 8 o'clock a.m. Nigerian local time. So I hope this explanation for this intraday price we actually derive you into knowing what to look out for today, into what to look out for more vividly in today price delivery. So we'll call it a day from here, and just go focus into what you have to do. And and well, I don't have much to say, but thanks for listening and see you tomorrow. Have a great day.